Hello to another review. Today we will be reviewing the trades I placed at January 8th. This day we had several high impact news including ADP non-farm employment change, unemployment claims, and also FOMC meeting minutes in the afternoon. I didn't trade the afternoon, I only traded the morning. And you will see in this review that I actually placed two trades. They were both losing trades. And I will also go into, alright, what have I changed to my strategy to avoid these losing trades in the future? And I will explain how I did that as well. So sit tight, let's go over this review step by step, and you will see my thought process and how I eventually improved my system based on these losing trades yesterday. So if we start the day off, we will see that we have a discounted opening range gap of 33.5 handles, and that we also have our NDOG bias, our NWOG bias. Those both are bullish, and our daily liquidity bias is also bullish, meaning that our finalized bias is bullish, as you can see in the bottom here, and everything combined is just screaming bullishness. So when the first presentation came, the first thing that I immediately did was very simple. We had a first presentation fair value gap in discount. So with all these things that are screaming bullishness, I just placed my long trade. This is my first trade with 8 contracts, and you will see that we get stopped out very quickly. So during this trade, what I noticed is that we have a lot of liquidity here, over here, and it actually didn't really satisfy me knowing that there still was liquidity here, but because we had equal highs over here and that my target of 25% was over here, and why is my target over here? Well, my minimum handle run on M&Q is 40 handles, so that's why it's over here instead of the 25% over here. Anyway, I knew that this was probably going to be a higher risky trade, and I didn't know yet how I could have predicted that I should not trade this day, but I will go over that later on after we have placed our second trade. So the first trade, it was a loss, and that's okay. There's no problem with that at all because we can trade twice. So let's see. Alright, so we close above the first presentation again, meaning that we can place another trade, and we are creating even more equal highs to the upside here. But notice that we also have these relatively equal lows as well. So price is still able to go both sides. But with this wick rejection, when I saw this live, I was like, okay, this probably will first clear the upper part and potentially will go down after. That's okay. I don't mind because then my strategy would have been satisfied. But what actually happened was this huge ass candle. Like, I don't know what happened here exactly. I know that right now we were in macro time, but we first ramped down to the downside, and what happened after was quite interesting. We first ran down to the downside, and then we actually went to my target, which was very annoying. So I was still confident because the strategy still worked, kind of, but because we had so much liquidity here as well, there was more of a risk-on situation. But it is what it is. I followed my strategy, and we took some losses. For your information, I lost $1,025, I think, on this. I placed a broker statement on my X to be extremely transparent with you guys. Like, I don't want to lie, like I only place my winners or something like that. That wouldn't be honest. So this was the entire trade, and I had 2 losses. Afterwards, I went into reflecting mode, and I was like, how do I solve this? And one thing in my algorithm is that this gray box over here and this middle line, this consequent encroachment line of that box, it is something in my algorithm that I didn't show before. But this gray box, this middle line, is actually the magnet of the average pricing of the NDOGs and NWOGs, in which I also calculate the clustering of NDOGs and NWOGs, meaning that that gray box is a very huge part into my draw on liquidity. Meaning that if the price is below the consequent encroachment of this box, we are in discount, and if we are above, we are in premium. And if you also combine that with setting profit targets, then it means that if you want a profit target that's above the consequent encroachment of the draw on liquidity, in this case, meaning that if we go above here, then we will want to go to have shorts instead of longs, that the likeliness of having trades around this area is very difficult. So that's made me think, and I programmed a little thing in here. And what it is that if we are setting our profit targets when we are in discount and we are looking for bullish price action and our profit targets are to the upside, and that's above this box, then I will not be allowed to trade. So in that reasoning, I'm able to, in the future, save money in these kinds of situations on non-farm payroll weeks. So I hope that I explained that clearly enough. It's a little bit difficult to go over the complete math. Um, so if you've got any questions in regards to it, feel free to ask, I would say. But for your idea, what the change is, so before right now I have it enabled, that button. But if we disable it, you will see that from the 16th of December, so the MNQH contract, before this change, this was my P&L. So right now I would be in minus $136, but with, and this is actually what my P&L is of since the 16th of December because of this trade here. If I enable it, then you will see that everything goes up again and then everything becomes a little bit more smooth. So I will keep this option on from now on and see how everything will, well, how it will work in the future. I also did try it on the cash register as well, and it gave a little bit of higher P&L. So I'm very satisfied with it. And I hope that you learned something from this video. It is potentially a little bit complicated, but the essentials from this video are: if you have a loss, review what you could have done better and why you potentially would have lost. So yes, I know that this week is not from payroll week, but I also know that, all right, it was very close to a potential turning point in price, because once it actually had hit my profit objectives, it immediately went to the downside. Like, look at this. So this is that line of where I said that's the consequent encroachment of the NDOGs and NWOGs. It hit it, and look what it did. It went down straight, like there was no tomorrow. And also combine that with having a Reaper fair value gap over here. That's the orange one. I knew that there were complicated things coming up here. So I saw what the issue was. I reflected on it. I found a solution, and sure, we lost $1,000, but we learned from it. Thank you for watching. Leave a like, leave a comment, and if you want to keep following me, subscribe, obviously. So, bye bye.